Hello everyone, welcome back to the Forex and Stock Trading Room. My name is Ed Ponzi. It's great to be here with you. We're speaking to you late on a Wednesday evening here, July 23rd. I just want to get to your questions first. We've got a lot of great stuff this week, and the highlight is my short trade on Euro USD that I want to share with you. We entered yesterday at 134.65, so it hasn't moved too much. I'm up 7 pips, woohoo, on the trade right now. So I'm going to go through the whole setup with you: entry, stop, targets, managing the trade. We're going to do all that because you know, this one's a little bit different. I handled this one a little bit differently, and I think you're going to see why. But before we do that, before we get to that, let's talk about your questions. And we have a bunch of them tonight, so we're gonna get to your questions first and foremost, and then we're going to move over to the Euro trade, and we'll finish up with our stock positions. Okay. Hi, Ed, can you please explain what is actually basket trading? Okay, basket trading can mean different things to different people. In other words, for a hedge fund, right, they might want to buy just a basket of healthcare stocks. Why? Because maybe they have so much money to throw around that if they pick up the best healthcare stock, let's say, they can't really buy enough of it. Maybe they're managing, you know, billions of dollars, and they need to put 20 million into an idea just for it to make a difference. I mean, how would you hate to? Wouldn't you hate to place a trade and be right, and then the gain was so small that it didn't matter? Well, that's the conundrum that these folks face. You see, maybe let's just say they really love Celgene. If they put all their money in Celgene, they're going to drive it to the moon. And that's not what they want, because they're going to be paying for it, paying higher for it, and that's not right. So instead they hit a button that'll say, okay, this is buying every stock in IBB, with the NASDAQ Biotech Index. You can have a basket. This is a basket. If I want a basket of biotech stocks, I can just buy IBB, right? And if I want a basket of retail stocks, I can just buy XRT. Okay, so that's one way to look at it. Now, what about, here's another way to look at it, right? So what about in the currency world? Well, we've said before, like, suppose I wanted to buy dollar yen. Maybe for some reason I thought, well, this is at, you know, it's at support, so I think it's going to bounce. So maybe I'm going to buy, maybe I want to buy, I don't want to buy dollar yen, but suppose somebody does, right? Well, if somebody buys dollar yen, and they buy pound yen, and they buy Aussie yen, and they buy New Zealand yen, is that 4 separate trades? Or did they just do a basket trade on the Japanese yen? They just shorted the yen on 4 different trades, right? If I buy New Zealand yen, I'm long New Zealand and short the yen. If I buy Aussie yen, I'm long Aussie and short the yen. If I buy pound yen, I'm long the pound and short the yen. If I buy dollar yen, I'm long the dollar and short the yen. In each case, you're short the yen. So that's not 4 different trades. That is a basket trade where you are short the yen across a variety of currencies. Okay, so two different ways to describe basket trades. You know, we could probably talk for a half hour just about that. Really, there's a lot of different ways you can break that up, but that's really what it means. Another question: I noticed that there are 2 major news reports on the housing sector: the new home sector and the existing home sector. What's the difference, and how does it affect the equity and currencies market? Great, fantastic question. Okay. In most countries, I'm sure, and also in the U.S., there are 2 different housing numbers that we watch very closely. existing home sales and new home sales. Now, it's exactly what it sounds like. New home sales means it's a brand new home. They just built it. Nobody's ever lived in this place before. Now, most people cannot afford a new home. And because of that, new home sales make up just 15% of all the overall sales of homes in the U.S. So therefore, existing homes, which makes up 85% of the market, that's a much more important number. So new homes, a new home is kind of a luxury, whereas an existing home is kind of a necessity for some people, right? So that's the big difference, and it's a huge difference. So because existing home sales makes up 85% of that market, it is much, much more important. How does it affect the currency market, first of all, and then I'll do the equity market? In the currency market, that's going to impact, like if new home sales and particularly existing home sales, if they're very weak, then the dollar is probably going to fall, because homes make up a big part of your economy, a big part of GDP. Let me explain why. If I buy a house tomorrow, an existing home, I'm probably, the first thing I do before I even move my furniture in, I probably have a bunch of things in mind that I want to do. Maybe I want to change the wallpaper. Maybe I want to tear out the carpeting, right, and put in, flooring, wood flooring instead. Maybe I want to, get some landscaping done. Maybe I want to buy a new dishwasher. Maybe I want to buy a new washing machine. There's a tremendous amount of expenses tied into that. And because there are so many things that you buy when you buy a new home, there are so many, purchases that are connected to that, that this is huge for the economy. It just goes out through, I call a landscaper to mow the lawn. I'm putting money in his pocket. He goes out and buys something, right? I have to give money to the real estate agent. I have to give money to the title agent. They run off and do things with their money. I go to Home Depot to buy a new cabinet. I give them money, right? You see what I'm saying? There's a lot of, so really, if you can get home sales moving, it does a tremendous amount for GDP, and that's why the Fed tried so hard to push interest rates down as low as they could. With quantitative easing, home mortgages, I bought a house last year, the mortgage is 3.5%. That's incredibly low. Why? Because the Fed knows if they can stimulate home purchases, that it's going to create this ripple effect throughout the economy, and that's why they tried to do it. It didn't really work, though. It didn't really work, but nice try on their part. Okay. What is risk on and risk off? What is the difference? What does it mean? Okay. Risk on means we're greedy. We're selling bonds and we're buying stocks, right? We're selling safe haven currencies like the Swiss franc, and we're buying risky currencies like the New Zealand dollar or the Australian dollar. We're buying stocks. That's risk on. Risk off means we're scared. We're selling stocks and we're buying bonds because bonds are safe. We don't want to get hurt. We're selling Aussie. We're selling New Zealand. We're selling the pound. We're selling euro. And we're buying safe haven stocks like the dollar, the yen, the Swiss franc. Why? Because we're scared. We just don't want to get hurt. That's it. That's the difference between risk on and risk off. Okay. Are gold and oil interconnected in any form? Well, they're both commodities, but they're not necessarily connected. In other words, like right now, suppose Russia says because of these sanctions that the world is putting on us, we are going to cut off the oil supply. We are the world's biggest oil supplier. We will not sell any oil to anyone. Okay, that would be a really stupid move because they have more oil than they need. But if they did something like that, it would obviously drive the price up. And when there's problems in the Middle East, it tends to drive the price up. Gold used to be something that would go up in times of turmoil, but honestly, it just seems to trade on its own, have to have a mind of its own these days. we are long a little bit of gold here, and it's really not doing anything for us. It's, you know, we bought it here, we were up, we were down, we're still down a little bit. It's nothing to get excited about right now. Okay, and with the Brazil interest rate at 11% and the World Cup's over, what do you think? Is Brazil's currency worth the trade? Okay, the Brazilian real is the currency, and USD BRL would be the currency pair. Now, I can't pull that up on TradeStation for some reason. One thing that I do like is EWZ has an interesting chart. That this is a stock index, a Brazilian stock index, and it looks like it's forming an inverted head and shoulders after a very, very long decline. And this appears to be a breakout right here. So that might be worth looking into, EWZ. But I don't know enough about the currency right now. And it's a shame, too. I'm going to Brazil in a couple months. I'm going to the Brazilian embassy tomorrow to get my visa. But I have not been following the Brazilian currency. There's just too much other stuff going on. There is a huge interest rate differential there. It's true, but you got to be really careful because it's not liquid. The Brazilian real is not liquid. The spread's probably going to be really wide. Brazil intervenes on a near constant basis to try to keep that Brazilian real within a certain area against the dollar. It's really something. It's very, very tricky. Okay, so we're just going to say let's not trade that one for now. And also a note, please pray for MH17. Malaysia is still in shock from the news. Yeah, it's incredible tragedy again, you know, so we're very sorry to hear that. Okay, great questions, huh? Do we not have the best students in the world? I want to thank you all so much for all of your participation. Here's a note. Just want to say, Ed, thank you for the mentoring sessions. I'm really enjoying them a lot. I'm learning a great deal, listening to you explain why you take or don't take a trade. And thank you very much. And I appreciate it. And we're going to show you, we're going to give you some more insight in just a little bit. So I hope you enjoy it. Let's talk about New Zealand dollar. Got a question coming in. You told me to consider New Zealand yen. I looked at the chart. It looks great. It is on or very close to the rise and support line. How do you time the trade entry? It is on support now. After the rate release, it might not be in the sweet spot for entry. Do you always wait for the release before you act? Well, let me tell you something. If you waited for the release, you did the right thing. It's very dangerous to jump into a currency right ahead of a central bank announcement. Look at this. Now, when we showed you this last time, New Zealand yen, yes, it did look perfect, but it got bombed out today. Got smashed. 87.40 right now. Take a look at this. It's going to gap intraday. Look at that. Why is it gapping intraday? Because they raised interest rates, and I think you're saying right now, Ed, that's crazy. Why would New Zealand dollar go down, in fact, gap down on a day when New Zealand raised interest rates? The answer is simple. A, everyone already knew they were going to raise interest rates. That wasn't even in question. In fact, they're probably going to keep raising interest rates. Everybody knows this. That's A. B, it's not what they did, it's what they said. Like I said, everyone knew they were going to raise rates today. No surprise there. The surprise came afterward when the Reserve Bank of New Zealand said the New Zealand dollar is overvalued and it's unsustainable. And that's why you see the big gap in New Zealand yen. And no longer does that chart look all that good. It's not very often that you see a gap on the daily chart in the middle of the week, right? And that's a huge gap. That's something you might see on a Sunday night. That's intraday. Pretty wild, huh? So yeah, maybe not such a great idea right now, New Zealand yen. I would say wait and see where the dust settles. We're still long the pound against the yen, by the way. And I'm down 58 pips on this trade, which is not fun, but my stop is 400 pips, so I'm a long way from being stopped out here. Okay. All right, great questions, everyone. Let's keep it going here. I got this one already. Here's one on multiple time frames. I know how you feel about spotting the trend on the long-term chart, but I see the market roll over and the bias change. Well, that's sort of a problem lately, is that trends aren't really trending that well right now. Like this is a really good trend, but we haven't done much with it, and it looks like it could be rolling over, but maybe it's a pullback within an uptrend, you know, on cable. I'm not sure, and I'm not worried about it because I'm already long the pound anyway, and I'm also long the dollar right now, by the way, and I'm short the euro. So anyway, as far as spotting the trends, listen, there's always something out there that's trending. Okay, but as far as moving averages, like with FXED, I'll use the 10-day exponential, the 20-day exponential, and those are very good trend indicators. You know, especially if the price is bouncing off of the 10 or bouncing off of the 20, those are very good indicators. So that's something that I would look into. But when it comes to multiple time frames, if you're looking for the trend, just pull up the chart and just look at it and say, okay, it's going from, look at the bottom left, look at the top right, it's going straight up. That's an uptrend right there. That's an uptrend. Okay. In other words, if you have to think about it too hard, then it's probably not a very good trend, and you don't need to worry about it. Always make sure you're looking at least 6 months worth of data before you try to determine if it's a trend. Okay? And finally, a question on the euro, and this is going to lead us right into our euro trade. I'm so excited because I'm short the euro for the first time this year, and I find that very exciting. The question is, what do you make of the latest break lower in the euro? Well, you're about to find out. Could it be that the market may see further weakness because of the EU sanctions will hurt the single currency? Well, a funny thing about those sanctions, and it's a great question, the funny thing about those sanctions is, first of all, some sanctions that were proposed earlier this week out of Europe actually seem like they would hurt Europe more than they would hurt Russia. They were talking about cutting off Russia from Europe's capital markets. Okay, that would hurt Russia, but wouldn't it hurt Europe too? I mean, the capital markets are there to make you money, and if you're going to cut off someone's supply to it, you're really hurting them and you're hurting yourself. And really, that may have been one of the catalysts that pushed this through. But regardless of the reason why, I like to look at this in terms of price action. Join me here, zoomed in. Remember this day? That was June the 5th. That was the day Draghi threw the kitchen sink at the euro. And it shot way down, and it almost touched 135, and it found a massive amount of buyers, and it shot way back up. That was very impressive buying. Later in June, it came down again. When it failed to really get close to 135, and it started to trend up a little bit, we bought some. And we got a 290 pip trade out of it. Not 290 pip from low to high, but you know, we got, I think, 50 pips on one lot, 60 pips on the first lot, 150 on the second lot, and 60 more on the third lot. So it's 270 pips. We got a nice trade in here. Now this time, why did I buy it here and not here? Well, there were obviously buyers, a lot of excited buyers at 135 back here. Here, there was less excitement, but it was pretty clear from the price action that euro just didn't want to go down. It didn't touch 135. It didn't come close. Now look over here. Where's the bounce? There's no bounce. It comes, smashes down, doji. No bounce. No green candle, nothing. Another doji, a spinning top. This doji here, it even takes a little peek under 135 to see what's going on there. It gets pushed back up pretty quickly. But it's almost like a, you know, it could be considered a stop hunt, but it could also be considered, it's almost like a spy mission. I'm going under enemy lines to see what happens, to see if the buyers push it back up. And so with this huge sell-off, a pretty big sell-off, and really no bounce whatsoever, and then it broke hard. I love the way that it broke. It didn't just float through. It smashed through 135 like it was big money and it means business. Not like a bunch of people placing 2-lot orders. I mean, someone sold a bunch and smashed it through, and then it wouldn't bounce, and it still wouldn't bounce. And I'm looking at this, I'm saying, it won't bounce. I mean, I went in, you look at the intraday, I'm looking at the intraday at the time, and there was a little bit of a bounce here, but nothing. And then they smash it down again, and it's like, oh my gosh, they mean business. You see, this is a bear flag, right? Flagpole, bear flag, right? They mean business. So when I figure out they mean business, I'm not gonna lie to you, I hit the sell button. Should I have thought it through a little bit better? Probably, but I knew I wanted to sell. I got pretty excited from that price action. I sold at 134.65, which a lot of people could have done over the past few days. That's our entry, that's green. Now for the stop, I'm going to take it back to the daily. I knew I wanted to be above this guy here. What's that guy? The high is 48. The high of that wick is 48. Add the spread, you're at 50. Round it up. I said, all right, I'm short at 65. My stop's going to be at 65 also. I wanted to be above this area here. I could have gotten away with 55 and still been above the area. I said, heck, man, I'm gonna shoot big on this one. So I'm going to give it 100 pips of leeway here. And there's my stop. So you have my entry, you have my stop, and it's really simple. I shorted it at 134. Whoops, it's down here. What am I doing? Here you go, 65. There you go, that's more like it. So now you've got the entry and the stop. Entry is here, and the stop's 100. Now I want you to look at the whole pattern. Just look at the, just drink that in for a moment. Look at that picture. What does it look like? Some might say it's a head and shoulders. Some might say it's right, like left, head, right. Some might call it a double top, 1, 2. It's some sort of weird mutant combination of a double top, a head and shoulders. We just call that a topping pattern, okay? It's a topping pattern, and it breaks 135, and it hits its lowest point in a year. Now, if something hits its lowest point in a year, I look at this whole section and I can say to myself, you know, I know one thing for sure. I know that every single person who went long the euro since late November anyway, every single person who went long the euro this year and they're still holding it, they're losing money. This I know. If you bought the euro this year and you're still long, hey, we bought the euro a couple times this year. We made money. We're not still long. We don't marry these things. We just date them, right? And we're not married either to our outlook. In other words, hey, not long ago, I went long the euro. Now I'm short the euro. Why? Because I'm a trader, and that's what we do. We're like pirates. We have no loyalty to no flag, no country. The chart says buy, we buy. The chart says sell, we sell. And we don't worry about it. Okay? Now what's going to be interesting is how it plays from here. Got your entry at 65 and your stop at 65, 100 pips away. What about targets? I'm going to do something a little bit unconventional with the targets. First, let me just get these numbers right on the beam. 134.65 was the entry. 135.65 is the stop. Green for the entry, red for the stop. It's a huge topping pattern. By the way, if you measured it, how far could it go down? The top is near 140. Let's call it 139.50, right? We'll cut out those wicks and we'll say the top's 139.50 to 135 is 450. You want to go down 450 more. Where does that take you? All the way down to here. Am I going to bet on the price going all the way down to there? Well, I might, but let's put it this way. I'm not going to place a trade that requires the price to come all the way down to 130.50 in order to succeed. I'll plan something out that can succeed even with a small gain that could hopefully blossom into something larger. Now, in order to explain my targets, and this is going to be a little bit unconventional, this is why we do this. First of all, I'm keeping you apprised real time of what I'm up to, and second of all, we're learning new things. We're not just learning the same things over and over again, and I think that's important. I chose for my first target 134.15, and a gasp went up from the audience. Ed, that's not even 1-to-1 risk-reward ratio. How can you do that? Let me explain. Actually, it's going to be much better than 1-to-1 by the time I'm finished. This is only the first target. Now, first of all, the first target is only 50 pips. The stop is 100 pips. You could say that the risk-reward is backwards on this. It's 2-to-1 instead of 1-to-2. But you could also say that there's a better chance of me hitting the target, which is only 50 pips away when I place the trade. Now it's about 40 pips away. It's a much better chance of me hitting the target than there is of me hitting the stop, because the stop is twice as far away. If all things are equal, forget about momentum and patterns and everything. If all things are equal, it's twice as easy for the price to move 50 pips than it is to move 100 pips in the opposite direction. Besides, this is not the entire trade. This is merely the first target. Why do you think I chose this for a target? Look to the left. I mean, in some situations, in a lot of situations, I would have used, if I'm using a 100 pip stop, my first target's going to be 100, 1-to-1. Why do you think, look to the left, why do you think I chose this area for a target? I'll show you. Reason number one, reason number two. This is a big former resistance point, and if I have my target on the other side of it, I'm basically trying to fight my way through a brick wall. So my first target's going to be easy, and all I have to do to assure myself a profit in this trade, make it down to 134.15 and close a third of the trade, move the stop to break even, and at that point we'll be playing with the house's money, which is my favorite way to play, right? That's all of our favorite ways to play. Additional targets are going to be based on other levels. 133.05 is another one. Here. Let's make this one 133.05. Boom. And 131.15. Why do you think I chose these levels? Look to the left. Look to your left. 133.05, it's just a little bit above the big round number and this level of, and it coincides just a little bit above that, the bottom of that move. 131.15 is also just above a round number and just above the bottom of this move. So we used these levels, and that's what helped us to determine our targets. If we can hit target 1, we'll move the stop to break even, close a third of the trade. If we can move this, if we can hit target 2, we'll do exactly what we did last time when we were long the euro. If we can hit target 2, we're going to move the stop down to the first target. But we'll keep you posted. We'll see how this goes. Hopefully we'll be hitting that first target and we can talk about playing with the house money. That's the trade, that's the setup that I'm using. Of course, just remember all this stuff is, I'm just telling you what I'm doing. What you do is up to you. If you're just learning this stuff and you want to follow along in a demo account till you get comfortable, Okay, I don't want anyone losing money out there. All right, now that's going to finish the Forex portion. We're going to talk about stocks for a minute and just a little bit of an update because really, we're kind of long again. We've added some long positions. Most of them are doing really well because the market's pretty strong. And you see how we manage the stock portfolio as a portfolio. In other words, when we trade Forex, we're trading each currency pair individually. When we trade stocks, we're trading a portfolio. Am I long? Am I net long? Am I net short? Am I flat? Am I balanced? Do I have, right now we have about 3 times as many longs as we do shorts. Apple, reported earnings. Apple's a rock star, and it hits another high, and this is getting very, very close to the all-time high, which was back here. We are still long and strong Apple. Yeah, we got rid of half of it a while back, but we've made so much money on this. That's the weekly chart. We've done so well on this, and yeah, we got rid of like half here. In this area. That's all right. I don't regret that. I mean, look, you do what you got to do. Amazon, we're also long. We got rid of half. You can, and we got rid of half. But you know what? It's still climbing for us. Thank you so much, Amazon.com. Let's talk about some other stocks that we have. Starbucks. People love paying $6 for a cup of coffee in this country. It really looks like it's going to break higher, doesn't it? It looks like it's just kind of trying to coil up and break through to 80. I just get the feeling that's going to go higher. Dean Foods, a little bit of a disappointment, but like I said, this is really, it got hammered pretty good the last couple sessions actually. But as I've said before with Dean Foods, this is a different type of trade. This is just something that I'm buying it because one day I think it's going to get bought out. I literally think nothing will happen, and then one day it'll be $25 and that'll be the end of it. That's the way I think it's going to go down. Lulu has been a great short for us. Look at that. It's just, look, got enough red candles there, Lulu? Aren't you glad you're short? I am. TGX, TJ Maxx, just lower highs and lower lows. This looks like it wants to go down, man. So I'm short. I'm short TJ Maxx and Lulu. We recently bought some WFC. That's Wells Fargo Corp, and that's not doing anything really. I think we're down a tiny bit on this one. We're up a bit on ACT though, our Irish pharmaceutical company. We bought that at $2.15. Now we're at $2.19. Hooray! And we're up on CBI, Chicago Bridge and Iron, which is again a stock that I feel is down basically because of a misunderstanding. If you've checked the earlier segments that we've done, I think that the market basically got this wrong. And Chicago Bridge and Iron, they smashed it down, and they probably were incorrect about the way they smashed it. But we'll see soon enough. No new positions to add right now. We're comfortably long again. and we're uncomfortably close again to the S&P hitting all-time high, but man, it's just kind of grinding higher, and you don't want to fight the trend. We got a couple shorts. Hey, you know what's the amazing thing is? We're short two stocks in this market, and our shorts are doing well. Think about it. This market just keeps going up. We shorted a couple stocks. The stocks we shorted are going down. It's a stock picker's market, they say. Well, you know what? It's always a stock picker's market. That's the dumbest saying I ever heard. Okay. Anyway, folks, that is the scoop. So I hope you enjoyed the session. Everyone have a wonderful rest of the week. Enjoy yourself. Be careful out there. And I will speak to you again very, very soon. Everybody take care.